Hey folks, happy Wednesday. Glad to have you here. It is an absolutely gorgeous day in Florida. Flat out, if I wasn't doing this, I would be at the beach. So y'all are keeping me from the beach. So let's just get that out of the way. All right. But I'd rather be here, everybody. Glad to have you here. Let us know where you're at. Smack those emojis and everything else. Grab yourself a cup of coffee and we'll get started here in just a second. Wow, good group already. I love when we get a good group that's in early. Some of my favorite things to do. All right, with that, we got a good group in, so let's get started, everybody. Good morning. Welcome to the 68th episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, Lebanon Invest Managing Director in North America, and I'll be your host for this morning's show. We have been doing this every day, Monday through Friday, since the beginning of April, since the COVID shutdown. And we've thoroughly enjoyed doing this, and we love the international crowd that has been consistently joining this and watching this. So please, in the comments section, do let us know where you're at in the world. Let us know what part of the world you're in. We'll try to give you a shout out. And most importantly, share the link to this stream. So if you look down, you'll see that little share link. Click on that thing. Let your network know that you're watching this. Smack the like buttons, pick an emoji you like, smack those around. And most importantly, please subscribe to 11FS. Both on LinkedIn, so you'll never miss a show. Our CEO, David Breyer, does this at, I think, 8:30 a.m. in the UK, which would be 3:30 in the morning. So if you're like me and have insomnia on the East Coast, you can watch David do these shows. And also subscribe to our podcast, FinTech Insider. It's one of the best podcasts out there, in my opinion, especially in this space. You can subscribe to us on Spotify. You can do this on iTunes. You take your pick, wherever you listen and subscribe to whatever podcasts that you enjoy. All right, with that, before we bring our guest on, let's talk about 3 news stories from the past 24 hours that caught my attention. It should have yours. So the first report is from TechCrunch. And TechCrunch reports that Facebook has announced that and this is TechCrunch's words, not mine, Facebook has announced that the LIMP Oversight Board to help make difficult content and policy decisions will not launch until late fall, which basically is to say after the election. You know, that election everyone's worried about Facebook's inability to police itself will seriously affect, as it did in the last election. On Twitter, the board explained that as much as it would like to officially begin our task of providing independent oversight of Facebook's content decisions, it regrets that we're unable to do so for some time. Our focus is on building a strong institution that will deliver concrete results over the long term, is what they said. I'm not going to say what I'm thinking about that story. I desperately want to, but it's too early in the morning for me to go on a cussing rant. Basically, Facebook and the boycott that's been taking place throughout the March, Facebook is taking a rather strong position against it, despite what Sheryl Sandberg said in the news yesterday. Let's see what will happen if more and more companies jump in on the boycott side. I will say that if you read the news stories, several of the civil rights folks that have met with Facebook yesterday said that the meeting was a supreme waste of time, to quote them. Second report. This one comes from MarketWatch. They report that nCino, which is a maker of cloud-based software for financial institution, and I've talked about quite a bit in the show, has launched its first IPO on Tuesday with plans to offer 7.6 million shares priced at $22 to $24 each. With this, the company had raised about $182.4 million at the top of that range. However, reports are coming out late yesterday afternoon that nCino is now hiking the IPO up to $201 million based on the interest it's seen. nCino has applied to list on NASDAQ under the ticker symbol nCino. Incredibly creative. There are 7 banks underwriting the deal, led by Bank of America and Barclays. Proceeds of the deal will be used for general corporate purposes and working capital. We empower banks and credit unions with the technology they need to meet ever-changing client expectations and regulatory requirements, gain increased visibility into their operations and performance, replace legacy systems, and operate digitally and more competitively, the company said in its prospectus. I have been a fan of nCino since I met one of their co-founders at Money 2020 many, many years ago. Pretty much talked to any of their clients, and they love nCino and what they've done. So a great fintech story. And finally, New York Times is reporting Harvard and MIT said on Wednesday that they had filed a lawsuit against the Trump administration over a directive that would strip foreign students of their visas if their coursework was entirely online. The White House measure announced Monday was seen as an effort to pressure universities into reopening their gates and abandoning the cautious approaches that many have announced they would adopt to reduce transmission of the coronavirus. The order came down without notice, its cruelty surpassed by its recklessness, Harvard President Lawrence C. Bacow said in a message to the university community. It appears that it was designed purposely to place pressure on colleges and universities to open their on-campus classrooms for in-person instruction this fall without regard to concerns for the health and safety of students, instructors, and others. This will be an ever unfolding story. I do believe 37 states are planning on suing the administration over the guidance provided by Secretary of Education, and I use that term lightly, Betsy DeVos, on high schools and elementary schools being forced to open for 5 days a week. Again, I'll follow the story and we'll provide updates on it. With all that, today we're super excited to be joined by Jillian Williams, head of BLCK VC New York and investment principal at Anthemis. And man, I love Anthemis. We're going to talk about both organizations on today's show. We'll talk about equality in the venture capital industry and how BLCK VC are working to empower and connect Black venture capitalists and investors in this space. Jillian, how are you?
Doing well, Sam. Thanks for having me.
How's the weather in beautiful New York City today?
It's warm today. I went for a run this morning. It was very humid, very hot. So I like the warmth, so can't complain.
What's it like running in New York during COVID? Because I used to love to run in Central Park, because it always felt like I was running a marathon with so many people that do it. Are there still a ton of people out running?
There's still a lot of people, but you kind of are like zigzagging into the street to aggressively get away from people. So it's a little bit more dangerous, candidly, but it's still getting done.
Yeah, for everybody that's interested, I just snorted coffee. That was wonderful because I know exactly what you're talking about. I've lived that life many times. I remember the first time I went to New York and went to run, I thought, who actually does this? This is nuts. And actually running in New York is now one of my favorite things to do. And I miss New York City to no end. All right, we've already got a lot of folks online. We're incredibly excited about hearing on the investing side. So before we do that, let's set you up as a subject matter expert, which you are, Jillian. So I was looking at your background on LinkedIn, and obviously you've done stints within the banking sector, but you have been a mentor and an advisor. You're a board observer on so many damn companies that one of them being Kinder, by the way.
Yes, we love. Yes,
so absolutely love that company. But some of the other ones that you're involved in, it runs the gamut, like everything from autonomous vehicles. How do you pick and how do you kind of choose which ones you want to be involved with?
Yeah, so Anthemis, so we're early stage fintech focused VC. We're based between the US and Europe. And so my primary focus is on our US portfolio companies. And while we're purely fintech, we define that pretty broadly. So everything sort of financial services, insurance, real estate. And then we also have this thesis just around sort of embedded finance and that the fact that fintech and financial services kind of like the nervous system for everything. And sort of that theme that everything is becoming a fintech really powers how we're looking to invest. And so if you look at our portfolio, it does seem very, very broad for just being a fintech focused fund. Yeah. But it becomes so interesting because you can kind of spend one day really deep in the weeds with a company like Coffee Labs that's in the commercial trucking insurance space. And then the next day I'm spending time with Rian focusing on sort of what does the future of retirement look like. And so it's really exciting to kind of get to touch so many different spaces despite just being fintech. But it's really just powered by sort of who are the founders that we're most excited about and what are the spaces that we're most excited about.
What kind of made you want to go into this space? Because, I mean, correct me if I'm wrong, you went to Yale, you studied economics. What kind of triggered this interest in the startup and especially the early startup?
Yeah, so I was at Barclays after I graduated, and I think and I was in the financial institutions group, so specifically the bank started focusing on what is fintech and where does it sit, because didn't really know if it should be within the tech group, should be within the FIG group. And they kind of tasked some of the more junior people to start working on that. And so I started to kind of dig deeper and deeper into the fintech space. And then I think at the same time, one of the things that I thought I would love the most about banking, which I know is weird to say, love and banking in the same phrase, but
this
was
is a safe group that you're in.
exactly.
Yeah.
But was the IPO and the idea of being part of this huge point in the company's life and in the CEO or the founder's point of the company and taking it public. And I think I kind of fantasized that a lot more than what was reality, which is basically a transaction for the bank. Kind of do it, and then it's like, okay, great. Now, like, chat again in 6 to 12 months when you need more capital. And so I think that was what really triggered me wanting to work with founders at the earlier stage and actually be able to work with them and help to, at least in some degree, shape the company and help them get to that point of achieving that ultimate goal of IPO.
Yeah, and for those that missed the show yesterday, jump on our YouTube channel for 11FS and go to the playlist. I had a great guest on yesterday, and a solution that I actually forwarded on to our CEO around tracking shareholders in those early stages of your company. Absolutely love the concept of that. And so it is amazing how much is out there, how many different type of solutions, how many different companies are out there that we have never heard of.
Yeah,
that
absolutely.
Are in those early stages and don't get the attention that they should because maybe they don't have the best marketing or press connections to TechCrunch.
Yeah.
That's me just making a blanket statement. I love nothing wrong with TechCrunch, but it is amazing who gets a lot of press. I'm looking right at you, Brex. You guys are great. You're fascinating, but come on. There are other companies out there besides Brex who, again, I'll say.
But even so, even if we all talk about Brex, think about like the bubble that we're in, that we all know about Brex. But then if you asked a random person on the street, they would have no clue what you're talking about.
90% of what we talk about, they have no clue what we talk about. And we need them to, right? Because you're building solutions that aren't targeted at us.
Yeah.
Maybe Brex is. But you know what I'm saying? I mean, the majority of this, and I say this all the time when I'm doing a keynote, right?
Yeah.
The people that matter are the people that are working the microphone, the stage lighting, that are serving those drinks. You know, if you're doing a consumer product, they're the ones that matter.
No, absolutely.
My opinion. I'm curious because, again, you've been doing this for quite a while. What are some of those early stage advice? I don't want to say mistakes, but advice that you typically see that you have to give over and over again that maybe some of these startup founders aren't thinking of. And I'll say flat out mine is if you're doing anything in the financial services space, your first or second hire should be your compliance officer.
Yeah, so I think that's one of the key things for us, and that we always say is that you can't use the typical like Uber type model of like move fast and break things within fintech because you end up in jail and not just sort of writing an apology. And so we are very, very conscious of that when we're looking at startup founders in terms of how seriously are they taking compliance and regulation. So I completely agree with that. And then honestly, at the earliest stage, and this might sound a little bit counterintuitive to like what my job is, but like really think about whether or not you need capital. I think at the earliest stage, you want to try to build as much as you possibly can without raising. And if that capital is not going to make it exponentially easier and growth exponentially faster, then like take some time before you raise capital. Because like once you do, you get diluted. You have sort of like a ticking time now on you, and you now are responsible to reporting to other people.
Oh my God, I love that you went there. So I'm going to flat out say this. I'm going to look right in the mic, or right in the camera and say this to everybody, especially those that are startup founders. Just because you can raise 10 million doesn't mean you need 10 million. Flat out. Okay. Yeah. I mean, how many times on Shark Tank, can't believe I'm giving that as a reference, but how many times have you had Cubans say, you don't need the damn money, right? You're fine. And there's a reason for that. And I think that gets back to working with folks like Jillian, like working with folks at Anthemis and Black VC, to work with those groups to find mentors that can give you that advice. I think that's probably two of the biggest mistakes people make. They ignore compliance and they take money because they think they need it.
Yeah, completely agree with that.
So let's talk about Black VC, if you don't mind. And am I calling it the right title?
Yeah. Yes, good. Exactly. So
I figured as much, but I wanted to be safe. Can you talk about what it is? What is Black VC?
Of course. So Black VC was founded in early 2018, and it's the goal is really to connect and engage and empower and advance the Black and Black venture investors by providing a more focused community around them. And so just kind of the fact that there are not many Black investors across, it's mainly focused on the US, and there's not many. And so how can we, try to increase the number? So the goal is to actually double the number by 2024, but also create that community within the VC space, but then also broadly within the tech space as well, and trying to get more people to understand what venture capital is and really demystify it as well. So it was started over in San Francisco by Sydney, who was formerly at NEA, and Frederick, who's at Storm Ventures. And then I joined at that time, but then helped to kind of head up the US side as of end of last year.
So I've had quite a few guests talking about either solutions targeted to minority communities, to the underbanked, or investing in companies in the Black community. And we've had Arlen Hamilton, for example, on this show before. And I think I've mentioned it before, but let me just go ahead and get it out there for everybody. You're like, what does this 50-year-old white dude care? I'm talking about me when you look at me. And I've said it before. I grew up in Detroit. I grew up in a family which pretty much covered every ethnicity that's out there. My mom had multiple sclerosis, so my Aunt Mamie, who is Black, raised me. And I grew up in a city which didn't see investment, flat out, where people fled the city because of the color of people's skin. This is why I get pissed off so much, folks, when I talk about it is now 2020 and the state still isn't great, man. I mean, when you look at the stats, I could steal stats from you, but Jillian, you probably know them off the top of your head. I'm going to read my show notes and a platform for you. More than 80% of VC firms don't have a single Black investor. 80%. The numbers get worse when you filter for Black investors who can write checks. Only 2% of all partner level investors are Black. 81% of all VC firms don't have a single Black investor. Man, it just ticks me off. In a sample of 160 firms with more than 2 people, only 5 have at least 2 Black investors. What the hell?
Yeah, I mean, it's pretty crazy when you actually look at the stats. And I think Dan Primack through Axios posted something in an email a few weeks ago that said that Black men represent 2% of all VC firms and Black women don't even make up a percentage point. And so with Black VC, we're not only focused purely on the venture capitalists, but also just like what that means for who's getting funded. Because honestly, if most people are never in a room with someone that looks different than them or looks like you when you're pitching to them, then the chances are that they're going to invest in you is slim. I mean, part of VC is really a human game and sort of having that faith, because at the earliest stage, you're betting on that person. And if you don't know anyone that looks like a person or acts like a person, then the chances that you're going to trust them so early are pretty minimal.
Yeah, it's Scarlett Seaver, who's a good friend of mine. She said this. So Scarlett, I love Scarlett. Scarlett's the one that got me tickets to Hamilton, Jillian.
Oh, wow. Okay.
No one else knows what the hell I'm talking about, but there you go. Scarlett's a very good friend. And Scarlett said this because Scarlett is, when she first got into banking as an executive, was definitely much younger than a lot of the other SVPs that she would see. And she said, I will flat out say, when you walk the halls at a bank, for example, and you don't see people that look like you, it's intimidating. It's hard, right? You don't see a lot of young women, for example, in those offices, right? And being able to actually have mentors that have been through this and seen it. Arlen talked about this in our interview with her, right? Having folks that you can lean into and see and talk with is incredibly important. And that's why Jillian, this is me saying this to you, I applaud folks like yourself that are doing this, because the reality is, you interned at Goldman. So for those that don't know that, to get an internship with Goldman means you kick absolute ass. You are good. You're the top of your class. You're nailing it. It's easy to get into those comfortable jobs, and there's nothing wrong with them to make that money. Anthemis does well, don't get me wrong, but corner office in Goldman is nice. However, if you want to change the industry, doing what you're doing is what we need. I'll flat out say that.
Absolutely. And I think one thing that we always say, because within Anthemis, we don't necessarily, when we're investing, we'll invest into anyone, but because we invest so early, one of the things that we really focus on is, okay, like now that we've invested and it's 2 people right now, you have to grow to 5 to 10. How are we going to make sure that that company is as diverse as possible at the earliest stage? Because I think that's a big challenge with a lot of these large companies is no one wants to be the first person that looks like them to be into a 50-person company. And I think to what Scarlett said, like my experience at Goldman and Barclays is very similar. Like most of the time I was the only Black female on the floor. There were definitely times when I was clearly working on Excel models and someone came up to me asking if I was the admin for the team. And so I think just things like that are going to happen when a culture is set from the onset. And so we're at Anthemis, we make a very big point of trying to create a culture. And I think one of the things is more so around values rather than culture fit, but really the values fit of our companies at the earliest stage, so that when they become Series B, Series C, D, and they now have hundreds of people, that it's diverse and it's more natural for new people to come in.
So Sid Rahar has asked a great question. Good morning, Sid Rahar. It's like 7 a.m. out in San Francisco. But again, a company founder, tech founder, he asked a great question. The VC business is a reputation business like top schools. Top entrepreneurs pitch to top VC firms, which then have great exits, which then attracts more top entrepreneurs. And so on and so on and so on. So how does a Black, Latino, minority VC firm attract top entrepreneurs, minority or not, so that they can become the next Sequoia?
Yeah, I think, well, I guess I'll add 2 things to that. One, if you look at the performance of like first time funds and as they go over time, candidly, first fund usually does the best of any funds. Like even if you look at some of the top tier funds, their first fund is probably an outlier in terms of performance. I'm making a very general statement, but there's definitely data that supports this. And so I think it's probably partially because like you have to prove yourself at that point. And so there's something to do with just hustle and showing a founder that you're going to do whatever it takes to support them. And like that's what they want at the earliest stage. Like yes, it's great to get obviously Sequoia and Andreessen money. And like, if they're good enough, like they should probably at some point take it, but maybe at the pre-seed or seed stage, like it might not be the best time to take that capital depending where your company is. And so if you're a founder that, or you're an investor that's going to out hustle and show the founder that you're going to be there for them, both on like a business and as a human standpoint, like through Corona, it's surprising talking to some of our founders, like how few of other investors and checked in terms of how they were doing mentally and health-wise. That sticks with a founder. And I think even if you're not getting into it, there are some of the best deals that I've seen have been recommended to me by founders that either we passed on or they ended up taking another term sheet. And that says something as well.
Yeah, I will flat out say relationships matter, people. Those soft skills, getting back to my interview with Tom Peters a couple weeks ago, soft skills and interpersonal skills are so damn important. Being able to build real relationships and finding those good mentors, I think that's one of the top skills I look for in people. Because you said this, this at the end of the day is still about people.
Yeah.
Right. You tend to invest in people. You want them to have a good idea, but I know flat out, I know there are folks that are going to fail with that first idea or that second idea, but I guarantee that third or fourth one they have
something out.
Oh my God, yes. And I'm willing to spend my time with them. A great question from Dr. Abdullah in Saudi Arabia. Hello, Dr. Abdullah. Again, it must be like, I don't know, 6 or 7 at night over there. What business sectors and technologies are you interested in for the coming future?
Yeah, so I focus specifically on fintech, and so it will be in that sector. But I think what's most interesting to me is sort of this idea of embedded finance and how you're seeing more and more that fintech is just becoming part of every interaction that you have and be kind of in some ways becoming a silent aspect to it, but it's a key driver to it. So, I mean, I think the most obvious example that you can take is like Uber and the fact that like payments is an afterthought. You just get in and out of a car. And I think you're going to see more and more things like that. Shopify last month or 2 months ago, time is blurring, announced all these new initiatives within basically offering financial products to their users. And I think that more and more, a lot of tech companies or companies will be looking at sort of integrating financial products and services into their platform. And so I think that's something that really excites me, both at the distribution level, but also at sort of that infrastructure level to power that change.
So we're actually starting to run out of time, believe it or not. So I definitely want to ask this question, specifically around Black VC. What programs do you offer people, and how can young people get involved if they wish for a career in venture investment? And last but not least, how can companies get involved with Black VC?
Absolutely. And so we host a fair number of events if you go to blackvc.com and sign up there. And we host events that range from like wanting to get a job or wanting to get an internship in venture capital. And we actually help to support more and more internships for people as well, and for students. And then we also host things for founders as well, in terms of how to communicate to VCs, like what happens after they say yes and you're negotiating the term sheet, and how to do so. So it really ranges from both how you can get in, as well as once if you're a founder as well. From the company side, we obviously would love more and more companies, if you're a venture capital firm, to help in terms of providing internships to more Black potential investors. But also there's ability to donate and support some of our events as well on there as well.
Yeah, what I would say, everybody, I've gotten to know the audience very well at this point. We've been together 68 times, everybody. So that's, 34 hours now that we have spent together. And it's been a lot of fun. We've got a very smart audience that participates in these shows. What I would say is share your knowledge, be a mentor. Programs like Black VC, again, in San Francisco, in New York. Find one that's local to you and share what you've learned. Giving will make you feel so much better than getting. Absolutely. I mean, that's just a fact. That's not something I came up with, by the way. Every society will tell you the same thing. Share what you've learned. That's one of the best things you could possibly do, is share what you've learned. So Jillian, where's the best place, one, for folks to learn more and get involved with Black VC, and also on the Anthemis group? Where's the best place for people to go out and find out? Absolutely.
So for Black VC, you can be on blackvc.com or on our Twitter, which is also just Black VC with no vowels. And then for Anthemis, it's anthemis.com, and we have Anthemis Twitter as well. And then for myself, my Twitter is JillWillNYC.
And I can tell you from 11FS standpoint, when it comes to Anthemis, we've been big fans for years. Folks, one big announcement I want to make, and tomorrow I'll do it at the beginning of the show. We have a blast doing these. Like I said, we've done 68 of these. We do these every day. Doing these every day takes a lot of work. So as times are changing, and as we're seeing different areas react to COVID a little bit differently, we're going to shake things up just a little bit. We're going to move this show to once a week. We're going to do these every Wednesday. So David will do the show from the UK. Again, if you're up at 3:30 in the morning, you have something to do. David will do these Monday, Tuesday, Thursday, Friday. I will do these every Wednesday. Same time, 10:30. We're going to start that the week of the 15th of July. If you have ideas for guests, ping me. You can Sam Maule at Twitter, sam@11fs.com. Or just reach out directly to the producers at breakfastshow@11fs.com. Everybody, thanks for being part of this show. We've enjoyed it to no end. Jillian, you and I will get together one of these days in New York and sing every Hamilton song there is.
Sounds ideal.
Everybody else, thanks for being here. See you tomorrow.
Thanks, Sam.